Well, there's more bad news for China's economy. Property prices for new homes fell by 0.2% between July and August, an indicator that the main engine of the world's second largest national economy is stalling. Prices were down 0.1% compared to a year earlier. The news comes just days after one of China's biggest property developers, Country Garden, told creditors that it had missed a debt payment and halted domestic trading of its bonds. All of this adds to China's wider woes, with falling prices indicating weak demand that hasn't returned after the pandemic. That's contributed to rising youth unemployment, with millions of college graduates unable to find jobs in the faltering tech sector. Well, let's get more on this now with Naeem Aslam, who's the Chief Investment Officer at Zay Capital Markets. He joins us now from London. Good to have you back with us, Naeem. Yet more trouble for another property giant. Tell us more about Country Garden's debt troubles. How confident are markets that the firm will be able to eventually pay its obligations and avoid default?
Sure. Thank you. And it's great to be back with you on the show. So, look, I mean, from market's perspective, you can see that there are concerns. But market is factoring in, yes, this is a situation where some sort of Armageddon is heading towards the entire market? Certainly not. And the reason that I'm saying is, if you look at the volatility index, if you look at gold prices, I mean, both of them like as a safe haven assets or asset classes which investors consider as a safe haven, we haven't seen any massive moves to the upside at all. So I think from an investor's perspective, yes, there are concerns. Yes, there are concerns about the economic weakness as well. Yes, it is also true that the economic demand or activity hasn't picked up to a pace that many were anticipating. And the news such as these property companies which are coming in the market are adversely influence sentiment. But I think traders are not massively worried about the situation currently. And then that is what we are pretty much seeing in terms of the currency market, in terms of the Forex market as well, really.
And Naeem, we know that in terms of the official economic data, many international economists were always wary as to the veracity of the figures that Beijing has released. But now China says it wants to stop publishing some other economic data, including youth unemployment numbers. So how will that potentially affect Beijing's ability to restore confidence among international investors?
I think that's a very valid point, and that is a concern among many investors because data coming out of China is always considered with this bit of a pinch of salt. But I think what traders and investors should focus at is what the PBOC is really doing on the back of these weak economic numbers that we are currently experiencing or that we see in the markets. So the stance from the PBOC is very clear. The PBOC is saying to us that, okay, they're cutting rates, they are a bit more aggressive to support the market and the overall sentiment.
Okay, Naeem Aslam, we'll have to leave it there. Thanks as always for sharing your thoughts with us.
Thanks for having me.
Now to other top business stories from around the world. The Turkish banking stocks jumped after US credit rating agency Moody's determined Turkey's banking system's outlook to be stable. The Borsa Istanbul banking sector index rose as much as 4.1% to the highest level ever after closing. Moody's says that Turkey's monetary policies are positive and supported banks' operating conditions. UK inflation has dropped to its lowest level since February last year thanks to the falling cost of electricity. Consumer prices rose 6.8% in July from a year ago, down from a 7.9% reading in the previous month. But the slowdown is unlikely to derail expectations that the Bank of England will need to hike interest rates further when it meets next month. And Vietnamese electric vehicle maker VinFast's stock market valuation has soared above Ford and General Motors on its first day of trading on the Nasdaq. Shares in the company jumped more than 68% to $37 apiece, giving it a valuation of around $85 billion. The listing comes as motor industry giants and newer manufacturers fight for a slice of the booming electric vehicle market.